In this morning's the tax tips and how to escape the pitfalls of overpaying the IRS. Financial advisor Michael Terrio of the Terrio Group here to shed some light and hopefully save some headaches.
I can't believe it's already been another year.
It is tax season
again.
already. So listen, let's dive into the major changes for tax reform 2017 still are manifesting now in terms of, and I think we have some of the figures here, but whether you're a single or you do what, married, you file married jointly?
Yeah, one of the biggest changes were the deductibility of your taxes. We've seen the standard deduction basically double. So theoretically it's doubled from whether you're single or if you're a married couple. We've seen that grow dramatically. So a lot of tax strategies that people were utilizing that could actually bring their tax liabilities down are no longer effective because the deduction's so high that they don't really necessarily need to go that itemized route. Even if you go the itemized route though, there are some limitations. There's something called a SALT deduction, which many people are unaware of, which is from your property taxes and your home mortgage interest. If you hit that $10,000 number, you're capped. So even if you spent $18,000 on it, you're going to be capped at that $10,000 number. So there was a lot of people that ended up with that April shock and awe last year.
We're going to go into that more in depth in just a second here.
Sure.
Talking about though, and the question always is, do I itemize or do I do standard deduction? You kind of have some key rules of thumb. One thing you said is if deductions are more than the standard, you itemize.
Yeah, you're obviously going to want to itemize, utilize ways to bring that tax liability down.
Okay.
If you're younger, you're a renter, you don't have any home mortgage interest.
Right, it adds up.
In that paycheck to paycheck time period, you may not have to do that.
That's the way you,
But for people with more complex strategies, it may make sense.
So seeking out these things and then trying to make the math add up, again, things that you can kind of factor in terms of your mortgage interest, correct?
Yep, and then another popular one's still going to be your charitable deductions.
Okay.
Charitable deductions are still going to be great.
Got it.
Your property taxes, mortgage interest, and a big one would be educator expenses. One thing that's been a little bit changed is you can utilize 529 plans for private schools now. It used to just be for college expenses. Now you can actually utilize it for private schools.
I know we have medical expenses there. What about those HSA accounts?
HSA accounts can be a really, really good saver for your money. I think a lot of people are utilizing those now, especially with the healthcare becoming more and more expensive.
Got it.
HSA can be definitely a golden thing.
Ask questions, don't just assume, and make sure you don't overpay.
And as much as it got compressed, there's still always going to be issues with taxation.
Michael Terrio, thank you so much. We appreciate it.
We appreciate it. Thank you.